Welcome to Brick by Brick, Building Wealth Through Homeownership. I am Kim Von Dohren, your Realtor.
And I'm your banker, Ed Marko. So we've had a bunch of people ask questions about how self-employed income is calculated.
When purchasing a home. Right?
When purchasing a home, yes.
Mm-hmm.
Actually, when borrowing.
Okay.
It's just these rules kind of matter all around in borrowing. Not so much for a credit card, maybe not so much for a car loan, but if you're doing any kind of personal borrowing, business borrowing for homes, anything that's a larger type of a loan, there's calculations that go into it. And not just for people that are self-employed. If you work and you get paid commissions and you want to use the commissions as income, the same rules apply to you as someone who is self-employed. So if you have a salary with a commission on top of it,
Mm-hmm.
you're working for somebody, you're getting a W-2. But if that commission is substantial, and it usually is if your commission sales, you fall under the same guidelines for calculating income as someone who's self-employed.
Well, this will be a great topic because there's lots of self-employed folks out there who are wondering, can I get a mortgage? Can I get a loan? And they don't know because, well, hopefully they've filed their tax returns. That's the first step. A lot of them haven't even filed their tax returns. Do you encounter that as a problem often?
Right. Unfortunately, yes. And it's getting progressively worse as the gig economy grows. You got the folks out there that are doing Uber, folks that are working for tips, all of those type of things. They want to count that income. But if you're not reporting it on your federal tax return, it doesn't count.
Right.
If it's not that's the first best rule. If it's not on your tax return, it's not. It's just that simple.
It doesn't exist.
Exactly.
That makes sense. And as a realtor, I try to explain that to people. This came up in another podcast we did where we talked about people who have cash under their beds and buried in their backyards.
Right.
That's a common phenomenon around here. And so it is not, I have had to tell numerous people, if it isn't in a bank or it isn't recorded somewhere, it is as if it does not exist. And I know that is the case for lending, correct?
Correct. Yeah. You must report income in order for it to be usable income. But there's even more to it than that. So first and foremost, if you're self-employed, or I'm going to use the word self-employed from this point forward, I mean self-employed, or you want to count commissions as part of your income. So if you're receiving money either one of those two ways, if you're self-employed, you need to be doing whatever that is for 2 complete tax years before you're even going to qualify to borrow money to purchase a house. In order to count that income, that is.
So I can't open up a business this year. Let's say I open it now because it's April. Mm-hmm. I open a business, I run the business, and I have amazing sales, let's just say, and I make $200,000. And next April, it's been a year, I come to you and I say, I want to buy a house.
Right. So you've had a partial tax year of being self-employed. You haven't even had a full tax year. The tax year goes from January to January. Fiscal year goes from usually September to September. We're concerned with your tax year. So you would want to have 2 years, full years of paying taxes. And you need to be paying taxes, though. That's the other side of this.
Here's the part people don't like when they're self-employed.
Right, yeah. So let's say you're self-employed and you generated $200,000 worth of what you perceive as income, and then you go to do your taxes. Well, if you're just paying taxes on $200,000 worth of income, you're probably going to pay $60-some thousand in taxes. You're going to want to not write a check for $60,000. You're going to sit down with an accountant and you're going to go through the tax code and deduct, rightfully so, all of the things that you can deduct: your mileage, the expenses, the cost of the goods and services that you provided or sold, office space in your house, wear and tear, hardware like computers and your cell phone bill and internet fees, and all these kind of things come out of that $200,000 that you perceive as income until at the end of the first year, maybe you have a negative number and you're not paying any taxes, or maybe you've made $20,000 or $30,000 that you're paying taxes on. When I'm calculating your income, I don't care about the $200,000 that you brought in. I only see the $30,000 that you paid taxes on. Right. That's your actual income. There are some things that get added back into that can fluff that number up somewhat, depreciations and things like that. It's kind of complicated. But at the end of the day, for the layman who's looking at their tax return, wondering how much income I should consider that I make for purchasing power, it's the amount that you paid taxes on.
It's a double-edged sword. I'm getting cut both sides.
Right.
I'm either gonna give it to the government. I'm gonna either not write off as many things as I possibly can to reduce my tax debt, or I am gonna not be able to get funding. One of those two things that you both of them can't happen. You either have to declare that income and not write everything off so that it looks like you made nothing, or you can't get a loan. If you do that, you can't get a loan.
Right. So there's two things that are true. What you just said is absolutely true. What's kind of nice about being self-employed or commissioned salesperson is that you control your income. Absolutely. The harder you work, most people, the harder you work, the more money you're going to make. The less you work, the less money you're going to make. So you have control there. But then on the other side of that, when it comes to a lot of these deductions, you and your accountant have control there too. So the smart business person is going to come to me and say, hey, I'm looking to buy a house in a couple of years. If I want to spend this much money, what should my income level be? And I'm going to be able to advise them as to what that income level can be. And then they can manipulate not their income. They're not manipulating their income. They're not cheating anybody. Eventually, it's going to get handled. But they can manipulate their tax return to show greater income for a couple of years, and then take those deductions that they didn't take the last 2 years and take them the following 2 years after they've achieved their goal of home ownership or whatever other kind of large loan they might be looking to do. You're not cheating. It's things like depreciation. You probably have the opportunity to depreciate equipment either in 1 year or spread out over 5 years. So if you're going to be buying a house, you might want to spread that depreciation out over 5 years so it's a lesser of a deduction. You'll get the rest of it later down the road and then pay a little more taxes so that you're showing more income. Or I should say show more income and inevitably you're going to pay more taxes because that's the way the code is set up. It's completely legal. There's nothing wrong with doing it that way. These are the options that you have as a self-employed person that somebody that's a W-2 worker doesn't have. They just pay whatever the tax is. That's it. You pay that tax.
Right.
And that's the end of that.
They don't have access to all the write-offs that someone like myself who's self-employed can write off.
Right.
But yes, then I am subjected to whether or not I am going to take certain deductions.
Right.
Because, you hope, especially so let's just talk briefly about this. When you're self-employed, for example, as a realtor, from one quarter to the next, my income could drastically change just from one quarter to the next, let alone from 1 year to the next. And so you're anticipating what you're going to owe and paying taxes based on that. Right.
Yeah. You're paying in advance on a guess. That's what quarterly filings are for.
Absolutely. And if you're not paying them, FYI, self-employed people, there's going to be interest and penalties in your future.
Yeah.
And I say that from personal experience.
Yeah.
So yes. And I've been a late filer. So that also creates more penalties and interest, none of which is fun. So having said that, the other thing that I encountered as a self-employed person, and so is my husband, so neither one of us have guaranteed income. Is that what do you consider it? What do you call it when you're a W? Because I know as a realtor and using you as a lender, you love my W-2 employees, clients, because they have guaranteed income.
Yeah, it's very easy to verify. So you've got a W-2, which is a black and white form that shows how much income they made, how much they paid in taxes, how much they paid in Social Security, all the way through it. And if you get 2 years of those in a row and they're very similar numbers, you have what's called reliable income. On the other side of that coin, we have folks like you that either if they're running a cash bit, what's called a cash business, well, all we can look at for income is their tax return and bank statements. I don't have this W-2 third party person out there letting me know what this person actually made. I have to take it at sight. There's no way. The only way to verify it is through that federal income tax return and checking account statements.
Mm-hmm.
So if you are self-employed, where you're in a business where you're not getting a 1099, you're not getting a W-2, you're going to want to keep very accurate bank statements to go along with your income tax returns when you're trying to verify income. Because not only are we going to want to see the last 2 years and see it be either steady or increasing, we're going to want to see your account statements for your bank for the last 3 months, right up to closing, to make sure that you're still in business. Because when you are self-employed, there's nothing to prevent you from putting your hands in the air and saying, I quit.
Mm-hmm.
There's nobody to report to. You are your own boss. At the same time, for that commissioned salesperson, they can just, what the term in the industry is called, they can just lay down. If they get upset with their employer, they're not happy, they're having a bad day, they just don't wait on clients. They're not going to get their commissions. There's all kind of reasons why a salesperson would lay down, but there's nothing for us to prevent them from doing it. So we need to see 2 years of, in this case, it would be your W-2 and your 1099, or maybe it's just a 1099. Maybe you're a straight commissioned salesperson for a credit card company, or you're a straight commissioned salesperson for a furniture store or a car dealership or whatever it may be. At the end of the year, you're going to get that 1099. It's going to say, this person made $100,000 in commissions. And then the next year, we're going to want to see the second one. We're going to see that you made $100,000 and another 1,000, or something that you're good at this. You can continue to do this. You understand how to do this. If you went from 100,000 to 70,000, you have a thing called decreasing income. And you know all about that, right?
I do.
Yeah. I can't lend to somebody that has decreasing income.
We were purchasing a beach house with friends of ours. And as I said, my husband and I are both self-employed. My husband is a race car driver and I am a realtor. So he's a very good race car driver. However, some years are better than others. Just like real estate, some years are better than others. Some years he wins the championship. That pays better than if he doesn't win the championship.
Right, I bet.
Right. So we had a year where we didn't have as good of a year. And then the next year, when we went to apply for a mortgage for this beach house, we are in the midst of the mortgage and I get a phone call from the lender. And I learned, because at that point in time, I had only been self-employed for 2 years and had not applied for a mortgage in that time. So I did not realize that when he called and said, you and your husband had declining income from 13 to 14, and therefore I can't give you a mortgage. And I said, I'm sorry, what? And he explained what you're talking about now. And I literally started to cry because we were in this with friends of ours and we had no idea this was a risk. And now not only are we disappointing ourselves, but we're disappointing them. Now, in the end, we found a lender who would loan to us. It was a credit union. But yes, that was a very hard way to hear that message and learn that.
Right. So those are the big pitfalls, is the period of time that you've been self-employed matters. You need to have I recommend 3 years of tax returns, because usually that first year, you don't start your business on January 1st.
Right.
And it needs to be 12 full months to count as a year that you're doing this. And that needs to fall within the tax year as well.
Right.
So 2.5 to 3 years is your best bet. you want to have a reasonable income that is either, flat, very steady, or increasing. It's best too if there's not fits in, you don't want it going up 150%. That looks suspicious as well. So yeah, I mean, not that they won't lend to you, but they're gonna want all kinds of explanations as to how you miraculously went from making $75,000 to $300,000 in 1 year. You should be teaching this to the world. So it needs to make sense.
Mm-hmm.
And then if you are commissioned, you want to keep that steady. You want to keep it steady. Don't, as they say, lay down. Don't let your emotions run away with you when you're having a bad day with your boss, because that's probably going to have an adverse effect on you. And then lastly, look for when you are going to borrow, find a lender that understands self-employed income. So let's just give you one example. So this year you made $100,000, or last year you made $100,000 on your taxes. This tax year you made $85,000 on your taxes. Now you've got decreasing income. If I'm a lender, I want to know before I say no. I want to say yes. I'm a good lender. I want to lend money, so I want to know why. Was there $15,000 worth of depreciation that you took on your tax return that I can add back that you didn't take the previous year, and now we've got flat or steady income?
Mm-hmm.
Let's pretend you don't have that and you legitimately did make $15,000 less. And it's halfway through the year. It's June. Can you show me 6 months of bank statements that would justify that your income is back at that $100,000 level? So you want to look for an experienced lender that is going to look for solutions rather than look at, because I get this all the time where somebody will call me and say, oh, I have this customer. We almost got to closing on the house and the bank turned them down because they have depreciating income. Can you help? Oh, I love those. Let me take a look. I can't always help, but a lot of time I can help because I know what I'm looking at.
Right.
I understand the tax return for somebody that's self-employed because I've been self-employed. I understand the pitfalls and I understand what's out there. So I know what I'm looking at. Most people, unfortunately, don't. They just don't do this. They never did it, so they don't understand it. They look at everything, it looks fine. They hand it off to the underwriter. The underwriter knows what they're looking at, pulls it all apart and says no, and they don't know how to fight back with the underwriter. So you want to have a good lender that knows what they're doing, just like you want to have a good accountant, so that when you say to the accountant, hey, I'm looking to buy a house next year, the accountant's going to say, well, then maybe we should take these depreciations and spread them out over 5 years instead of taking them all at once this year. So you're going to have to pay a little more in income taxes than you want to, but you'll have a better looking income base for the bank.
I think the overarching theme is if you are self-employed, you absolutely have to have 2+ years of filed tax returns.
Yes.
You need to plan ahead. You can't impulsively, unless you already have that in order, just either coincidentally or fortunately, you cannot, without planning, be prepared to necessarily buy a home. So you also need to make sure that you have resources. You, number one, need to have an accountant. You should anyway if you're self-employed. And you need to have a lender who knows what they're doing. I know that if people tend to not want to ask for help till they're ready, but the truth is if you use somebody or you want to use somebody, then reach out to them. They'll be there. If they're a good lender or a good accountant or a good realtor, in 2 years when you're ready, they'll still be there. But reach out to them now. Plan ahead and say, hey, Ed, I want to buy a house. I'd like to buy it this year, but you're telling me I can't buy it for 2 years. Okay. But reach out in advance so that you know what you need and how to do it. Ask your accountant, ask your lender, ask your realtor so that you get some advice, because self-employment is a lot of us started out like I did, made a mistake, didn't know that declining income was a no-go. You don't know. You're kind of learning as you go. That is being an entrepreneur. That's being in business for yourself. You're often learning it the hard way, baptismal under fire. And it's great. It's a wonderful experience. You get freedom and flexibility, and you're empowered to have more control over your own life, but you have to approach things differently now. And having resources is critical. And planning ahead. Definitely. If I take away anything from this conversation, it will be, I need to be more thoughtful about how far in advance I need to look when I want to make a move like that because of my self-employment status.
Absolutely. Absolutely.
Yeah. Anything you want to add to that?
No, actually, I would just say at this point, if you're listening to this and you found this helpful, share it with a friend. If you've got questions, reach out to us. Definitely, like and subscribe. We'd appreciate that.
That'd be great.
But until next time, I'm Ed Marko.
And I'm Kim Von Dohren.
You have been listening to Brick by Brick. Be sure and subscribe, post questions for future episodes, or comment. This is a Super Squirrel production, Super Squirrel Studios, Stony Creek Mills, Pennsylvania.